Welcome back to my morning report analysis videos on Monday 5th of December with me, Richard Perry, market analyst at Tantech Markets, looking at dollar yen, and a really strong reaction actually. Initially we saw dollar yen falling away as the markets were taking a bit of a hit on risk appetite, but risk appetite subsequently improved and the dollar has taken on strength. It's basically been shown across the forex majors today, and certainly dollar yen is one of the big underperformers of the day on the back of that. But you look at this chart and you'd still sort of question whether this is going to be a correction coming through. We had two bear candles that were subsequently sort of followed by a couple of bull ones last week. Is that going to be the case again? Now this is happening around this resistance around 114.55. 114.82 was the high, but 114.55 were these sort of old key highs from sort of February, March time last year. And it'll be interesting to see if this is actually a point at which the market starts to lose a bit of impetus, because you look at these momentum indicators, certainly the MACD line is beginning to come together. Stochastics are not what they once were, neither is the RSI as well. So if you saw the RSI back below 70, that would be a signal. I think stochastics also back below 80, that would be a signal for possibly near-term profit taking. But for now, obviously the bulls have backed this one again. I talked about in the morning report, and the point at which I was writing it was the market was below 113.90. So the fact is that this 113.90 is the first time in the run higher that a key reaction high, old breakout, has been breached of support. 111.35 was the previous one. 113.90 initially had been holding, but sort of rolled over and sort of started to form lower highs. Now those lower highs are being sort of broken again as the market has come in to support this and pushed it back above 113.90. However, I would say that 113.90 is now going to be seen as a bit of a sort of a barometer perhaps for this chart, because that is the old key reaction high, which had been supported but sort of fell away. And if it starts to turn into a bit of a pivot, that could be interesting, and this one could turn into more of a consolidation. But for now, obviously the bulls have reacted positively this morning, left the support at 112.85, sort of pushed on back above back from 113.30 as well. So initially the support is 113.90 and then 113.30, but the outlook has become a bit more mixed in recent days, and it'll be interesting to see if this sort of recovery that we've seen in the dollar yen following on from this Italian referendum continues higher. At the moment it is, or has formed, a bullish outside day, so you'd be taking that as a positive. But I'm still a little bit concerned about these momentum indicators here, which are certainly not as positive as they once were. And as I said, little bear divergences there on the RSI and stochastics and MACD lines coming together. So I wish you good luck in your trading today, and I will speak to you later. Thank you.